Good morning and thanks so much for tuning in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. Now, this show is aimed at getting you answers to all of your stock-related questions, and you see a number, or you will see a number on your screen. You can send us your questions on that WhatsApp number or in fact on any one of our social media platforms. But before we get to that, let's take you through what's happening with the equity markets right now. And you have the benchmark index, the Nifty 50, that's trading as flat can be. In fact, you saw a bit of a downtick at the start of trade, but right now we're standing at exactly where we ended yesterday. And this is actually better than a large number of global equity markets. You saw the handover from the US markets overnight. That wasn't very pretty. And in fact, quite a few of the Asian markets also are seeing downticks as we speak, even right now. The broader markets, in fact, looking even better. You have the mid-cap index that's gaining about 0.4% right now, and you have the small-cap index that's up as much as 0.9%. And a look at the sectoral moves today, you see that the bank index is down only about 0.1%, but the worst performer is the realty index, which was an outperformer yesterday. Media is doing reasonably well. IT is gaining about 1.2, 1.3%. Remember, IT has been under a little bit of pressure in the recent past, and it's picking up a bit. You have metal as a pack that's also gaining about 0.5% or thereabouts. Not too much to speak of, and not too many big movers. But among them, I will point to a few, and we're not really certain as to why they're moving right now, but it's important to mark them. The likes of Mazagon Dock, as well as Garden Reach Shipbuilders, Cochin Shipyard, all of these ship-related companies or shipbuilding companies are up and about in trade today. Perhaps an announcement is something that you can look forward to. We don't yet know why this is happening. But we are going to focus on one particular stock today, and that is MOIL. It is also up as much as close to 5%, and there's a reason why. It is to do, Smriti, with the business update.
Right. Good morning, Alex. And MOIL is one of the stocks that has been moving today. After a business update, the other stocks that are moving based on this similar announcement is Yes Bank and even Satin Credit Care. But focusing on MOIL, it came out with its numbers, the business update numbers, and we have Kanika joining in to give us details about that. Kanika, how do the numbers look? Because the stock is up about 4.5% as we speak.
Right, Smriti. So shares of MOIL are up by more than 4.5%, and this is mainly on the back of the company achieving best ever production of any financial year since inception, which showed a 35% year-on-year increase. Now this is 29% higher than the previous best ever production, which was in FY 2008. And on the sales front also, the company has hit an all-time high, showing a 30% year-on-year increase. And the company has also achieved best ever production in electrolytic manganese dioxide, which is higher by 28% year-on-year. Now, EMD is a 100% import substitution product used mostly for pharmaceuticals and battery manufacturing. Going a little further, going a little behind, on 1st April, MOIL implemented price hikes across product categories. It implemented price hikes on ferro-grade manganese ores by 3 to 6%, fines and chemical grades by 3%, and electrolytic manganese dioxide by Rs 2,000 per metric ton. And this was all done with the intention of a revenue boost for the company.
So that's something to look forward to as well on the back of higher volumes. We'll get you a check on what the fundamentals look like and what you should do as a prospective investor. But before we do that, let me introduce the first guest today. We've got Kunal Rambhia from the streets joining in, and we will also soon have Vinit Bolinjkar. He'll join imminently. But before we go to Vinit on MOIL, I would like to ask Kunal about the three shipping related companies or shipbuilding related companies that we spoke about at the start, the likes of Mazagon Shipbuilders as well as Garden Reach. Up and about in trade. Any technical indicators that are pointing to why Garden Reach up as much as 8% right now? Kunal, morning.
Very good morning, Alex. Morning to everyone. So, if I look at the overall chart, now see, Garden, Mesgaon, these counters have been in trend since quite a long time. And in fact, the first breakout which we saw on the chart was somewhere in in the month of November 2022. And since then, this counter is clearly making higher top, higher bottom. If I just specifically speak about Garden Reach, then this counter was in consolidation in the last 6 to 7 months. But now, today, I think it's on the verge of giving a breakout. So these trends are just on, and in such kind of markets where the markets are not willing to give up at all, I think the best strategy would be to trail the stop loss and hold the position till the time the trend is intact. So as of now on Garden Reach, one can hold the position with 825, 830 as a support in mind, and if the counter manages to go about 910, I think the targets of 1100 are also likely to be seen on the charts.
While we're just one more point I would like to ask before we get into conversation with Vinit. I understand that he's going to be joining imminently. But on the benchmarks, and we're looking at a little bit of pressure, not too much on the Nifty Bank. It's not supporting too much today. But on the benchmark, amidst this selling pressure that you're seeing across the board in global risk assets, we're still holding out, Kunal, on the Nifty 50 at least, and the broader markets are looking sanguine. What are you reading in the latest cues on the index front?
So Alex, there is very, very, very much common way of looking at this, and this is that either there has to be price correction or there'll be time correction. So what we are witnessing on the indices is almost like a time correction. Now look at just historical data. That's from January 2024, where we saw the Nifty trading at around 22,100. Right now it's trading at 22,400. It's been almost sideways consolidation. The uptick which we saw was just in last 2 to 3 days with a small gap up in between. So this is a kind of time-based correction, sideline correction. And so that's the, I think, reason the markets are not really giving up. I think this sideways momentum might just continue on broader indices, and the stock specific moves which we are witnessing in the markets are really very strong. So it's advisable to focus on those stocks which are doing really good and starting from the extreme low levels, and avoid indices for time being from trading point of view at least.
Good morning, Kunal, and thanks for that. Let's come back to MOIL. Now, Kunal, if you look at the past performance of MOIL, the stock performance, it's been a multi-bagger, and even in the last 5 sessions, it has given 12% gains, and we're seeing gains today as well. What kind of upside target do you expect for the stock?
Morning, Smriti. So, overall performance of the MOIL and other PSU counters were also very much laggard till 2022-23. And what we saw as an uptick actually started on MOIL somewhere in July 2023. Counter since then has given almost 110% returns. Clear higher top, higher bottom formation. Otherwise, people are honestly holding this counter in the portfolio from dividend point of view. But this has given this capital gain first time in this entire journey so far. If you look at the last 3 months performance since January, a sideways consolidation with a bit of negative bias, but today it's giving a clear breakout of double bottom again. So I think one can initiate a fresh position also at 318. The overall trend which we witnessed in last entire year still remains intact. The stop loss of this entire view will be at around say 300 to be precise 295. Till the time the counter is about 295, I think the upside to the levels of around 375 to 380 are very much likely. And again, even at those levels, I will not advise the profit booking. Rather, we trail the stop loss and hold the position. This can keep on surprising on the higher side.
Point. So I understand we're having a little bit of a technical issue with Vinit's line, but in the meanwhile, let's start with the queries. And in fact, let's focus on the technicals right now. We've got Guru Prasad from Chennai who's asking the first question on a couple of stocks. He's got Trident, which he's got Kunal 40,000 shares off. And he's got Yes Bank 1,250 shares off. He's not given us the buy price, but hopefully he's bought at lower than the current market price. Assuming that he has, what's the kind of advice that you would give based on what you're seeing on the charts?
See, Alex, on both the charts, honestly, the formation, I am sure there must be specific way of looking at these counters from our investors also point of view. These counters are in broader sideways curve formation. Now, curve formation takes its own time. If I look at Trident's long-term charts, January 2022, where the counter was trading at 67, and right now it's trading at 40 odd levels, this is a sideways curve formation again. I'm very bullish on this. These curve formations generally take little longer time to deliver good results. For time being, the stop loss on this chart on Trident can be around 33. If this counter breaks 33, then we should certainly turn cautious. Otherwise, hold on to this position. The first immediate target can be 55, and above that, we can expect the targets of 70 also. As far as Yes Bank is concerned, again, the formations are almost the same. Trigger is almost on chart today. That's at around 25. So if the counter manages to go about 25.30, or 35 kind of levels, then certainly one can initiate a fresh position. Stop loss will be 22, and the targets can be as high as 31 to 32 again. But out of two counters, I would be more comfortable with Trident and less on Yes Bank.
All right. Next counter we're talking about is Bank of Maharashtra. Now the question is from Venugopal Reddy from Hyderabad, and Mr. Reddy has already bought the stock at 39 a piece. The stock is currently trading at around 64 rupees. Kunal, if you look at the trajectory of it's been a little choppy today. It's in a bit of a downturn today, but has given a decent return in the last couple of trading sessions. But from here on, the question is, should you continue holding on to it or maybe exit partially?
Smriti, again, Bank of Maharashtra, IOB, and even, in fact, Central Bank, all three of them are looking similar on the formations. But the interesting observation on Bank of Maharashtra is that it has reached the peak of December 2012. Almost 12 years back, the counter was trading at the same level, and it's reached back to the same level again. And because our viewer has taken perfect entry near to those extreme low levels, as of now, I think he's sitting on a gain of 100%. Ideally, you should take out his capital at least from this. Sell 50%, hold remaining 50% with the trailing stop loss of 55. I think the trend is certainly on, but this is a level which we saw almost 12 years back. So this might act as a resistance for now. So be a little cautious, take out some profit at least off table, and trail the stop loss to 55 and hold the position for the remaining quantity.
Okay. I believe we've got Vinit joining in. Vinit, pleasure as always having you on the program. I'm not sure if we're going to have a view on this, but I'm going to ask you anyway. We've got a question from Arpit. He's asking about Gensol Engineering. I believe that it is either at an upper circuit in trade today, or it has hit. I know that it has hit today. He bought at levels of 868, and he's got as many as 1,000 shares. He's wondering whether he can hold for the next 4 to 5 years. What's the view, Vinit?
No, definitely the good counter that he's gotten, and he got into it when there was artificial selling, in the sense that it was induced from a regulatory angle. The fact that he's gotten at these levels is very interesting, and he should continue to hold. We expect some fireworks from this stock happening over the next 3 to 4 years.
Next stock is a railway stock, Vinit. This one's from Priya, and they're talking about IRCTC, which they've bought at 9.55 a piece. Considerable profit there, but from a longer term perspective, do you see these railway stocks to be overvalued right now as well, even though we've seen a bit of correction there?
See, IRCT is absolutely a platform company, should not be compared with the other railway stocks, primarily because, the others are more infrastructure plays and IRCT is a more of a consumer play. And to my mind, I think, the consolidation phase of this stock over the last couple of years has come to an end. And we are in an upward trajectory, and IRCTC has been signing a number of partnerships, Zomato, Swiggy, and they're looking at other areas of interest also. There's going to be booking of hotels and allied travel-related services. So, the costs are fixed, and all these incremental sales add directly to the bottom line. And I think that this stock in the short term is very good for another 8 to 10% run.
I'm asking you a question. I'm coming back to you, Vinit, because we've not asked you enough questions today, obviously. Hindustan Copper, and this is a question coming from Urshita. She's writing in from Mumbai. Now, we've established often on this platform and others that metals is a cyclical play, And based on what we're hearing in a few pockets, whether you're talking about Chinese manufacturing, whether you're talking about the strength in the US economy, seemingly we could see an uptrend in the underlying. But you've already seen the stock price of Hindustan Copper rise as much as 13% in 2024 and over 200%, if I'm not mistaken, over the last 1 year or so. Is this still a buy at this point?
No, definitely you can enter at these values also. The reason being that, if you look at copper, it's a commodity in short supply globally. The entire big continents of Europe and North America are going in for infrastructure spend. Weapon stockpiles of majority countries are depleted, and with the geoeconomic concerns and geopolitical turmoil, I think everyone is upping their spend. Copper is a very vital element for all these. It is also a vital element for the entire power, renewable power segment. So I think power is going to be in good demand, short supply. And with the dollar debacle looming on us because of the unsustainable debt of the US, I think commodities or hard assets are coming into play now as a store of value. And these commodity trends, when they pan out over these macro factors, they tend to last for 8 to 10 years. So we are in the early days of a metal cycle, and Hindustan Copper, being India's only copper manufacturer or iron copper producer, is the best bet to have. So they are not only into copper, the cathodes, they're into copper mining. They've got 5-6 mines. They're exploring new ventures. So all in all, a very good stock to hold and buy from current levels.
Right. So Hindustan Copper, very constructive on that particular stock, especially as Vinit mentioned, this may be a start of a cycle for the metals, positive cycle for the metals. But it's time for a short break, but we'll take more questions on the other side. Stay tuned. Welcome back. You're tuned into Ask Profit. Let's jump into the queries again. This one's from Arvind from Andhra Pradesh, and He's talking about Aditya Birla Fashion, the stock. Now, Vinit, we discussed the stock yesterday in detail on the news of demerger of its lifestyle business, Madura Fashions. Now, the street did not take very positive cues from this announcement, and even brokerages continue to remain not as positive as you'd expect. Now, however, the company says that there's going to be value creation through this demerger. Do you also see it that way?
I think, the proof of the pudding can be seen only when the quarter results are out. I believe that the stock has been a laggard compared to the sector. Much of the different retail companies have moved up. We've seen Trent, DMart, V2 Retail all pick up, and ABFRL has been sincerely lagging these counters. So unless and until we actually see the numbers come through, some kind of indication of quarter-on-quarter growth, I don't think that people should venture into it. It should be more of a stock on your radar rather than in your portfolio.
All right. Coal India is the next stock that we're talking about, and we've got Ratna who's writing in from Kolkata and asking about this. Bought at levels of 415. It's at 445 right now. From the perspective of 3 months, Kunal, I'm coming to you. How does it look on the charts?
Absolutely trending counter, Alex, and the sideways consolidation since Feb 2024 so far is just taken out today. If the counter manages to close above 450, I think more room for upside is definitely open. We can expect the targets of around 485 to 490, and the stop loss of this entire view is going to be 415, which is, I think, viewers' buying price itself. So with that particular stop loss, one can certainly hold on, and the targets can be 485.
All right. Kunal, the next counter we're talking about is Infibeam Avenues. This one's from Saurabh. He's bought 5,500 shares at 28 rupees. It's currently trading at around 37 rupees. But from a shorter term perspective, how does it look on the charts?
Again, this chart is very much trending. August 2023, the counter was trading at around 14-15 rupees. And since then, clearly making higher top, higher bottom formation, sideways consolidation of last 1.5 months is on the verge of breakout now. So yeah, so far breakout is not happening. The breakout is at 40. So I think one can certainly hold on to this position. The trailing stop loss, which our viewer is supposed to maintain, is going to be 32.5. If the counter falls below that, we'll have to turn cautious. Otherwise, above 40, this counter has a potential to show us the levels of around 50 to 55 also.
All right. ITC is the next counter we're talking about, as well as Tata Power, but I will only take on ITC because we promised to take one question per viewer. ITC bought at levels of 425 by Raghuram, who's writing in from Bhubaneswar. I'm going to ask about, so he's asking about the short term. So Kunal, on the charts, how does ITC look?
See, Alex, since May 2023, this counter has maintained a stable level of 425 itself. See the extreme highs of 500, lows being 390 and back to 425 again. I think this counter can clearly be avoided for now. If someone is willing to hold on for a long period of time, I think this is a good level. One can initiate a buy with the target of around 455, 460. But otherwise, this counter seems to be a laggard and a kind of sideways consolidation counter. Not good from short-term point of view.
All right. Next one, we're talking about IDFC First Bank. This one's from Srinivas Rao from Vijayawada. Now, Vinit, talking about this specific counter, it's in a bit of a downturn today. It's down 1%. But from a longer term perspective, okay, just to mention the buy price, they bought it at 51 rupees and it's currently trading at 78. From a longer term perspective, do you have any targets on this particular stock?
I'm seeing this stock easily cross 100 in the short run. In the next 6 to 9 months, we can definitely get a price of 100 on this stock. It's firing well on all cylinders. Growth is good. Margins are intact. NPA levels are under control. And the growth story continues to pan out. So I believe that you should continue to hold on to this stock. It's just short-term blips if the stock is down. But I think it should cross these 100 levels very soon.
Okay, I think that answers Rahul Das's question as well. He's writing in from Guwahati. The next question I'm taking is on 361, and this is from Rahul. He's writing in from Delhi, and he's bought at levels of 650. He's seeking a short-term view. He's gaining ground The stock is at 700 or thereabouts. Kunal, on the charts, how does it look?
Alex, I'm just trying to find out the stock. Meanwhile, no, I think I'll just take a bit of time.
300,
yeah, I got it. I got
361.
it. Yeah, absolutely. I got it. See, this counter is again a sideways consolidation counter with positive buyers. The view remains definitely bullish. The trailing stop loss on this has to be maintained at around 650. Till the time it's above 650, I think this slow and steady movement might just show the levels of 770 to 800. Also, the view will get negated only below 650. So hold on for now. It's not a counter where we can expect a quick returns, but the trend is certainly positive.
All right. The next counter we're talking about is another bank counter, Vinit. This one's SBI. Now, this question is from Praveen, and they want to know if this is a good time to buy the stock. Would you suggest buying at these levels? And in terms of valuation, from a longer term perspective, what do you see in the stock going forward?
Our target is around 1050 on this stock for the next couple of years. And if you want to really buy a banking stock which is safe with low downside risk and value still there, I think SBI is the big ball to buy. So definitely SBI over the next 2 quarters, you will see some very handsome gains come in this price.
Okay, so let me pose this question to you then. For a lot of people, HDFC Bank is a buy at these levels from the long term. Given a choice between the two, Vinit, would you be a buyer in SBI or would you buy HDFC Bank?
So there are two things. There is a play in HDFC Bank, which is listing of HDB shares, from which they get a lot of capital, which helps to shore up their capital structure. But if you see purely on valuation basis, I would stick my neck out and go with SBI. So SBI has a whole lot of incremental, bonds that they've bought that can be used to finance in times of tight liquidity. Number one. Number two, valuations are cheap. And, the return ratios are on par with HDFC Bank. Today, probably better. Third thing is their NPA levels are considerably in control. And fourth is the fact that, it has got these listed subsidiaries, which are SBI Life, General, SBI Cards, and SBI Mutual doing really well. So I think that, there's a lot of incremental money to be made. And, your percentage returns in SBI are going to be far, far better than that of HDFC Bank.
Fair
so
point.
I think I will go with SBI Bank any day.
Okay, fair point. Vinit, as well as Kunal, thank you so much for joining in, for answering all the questions that you did. Always a pleasure having you on the program. Viewers, well, we tried to answer as many questions as we could today. And of course, some of you have gotten your questions unanswered, but we've promised to take as many of them tomorrow. Do tune in at 11:30. In the meanwhile, lots more coming up over the course of the day. Do stay tuned. This is NDTV Profit.